In this video, I'm going to be showing you how to use options along with the shares that you own of a certain stock to make a weekly passive income. However, the only qualification that you need to have in order to do what I'm about to tell you is you need to have at least 100 shares of any certain stock. But before we get started, I need to sort of explain what the heck we're going to be doing. In this video, I'm going to be teaching you guys how to sell call options, also known as a covered call. This is a very easy and very basic option strategy that you can use in order to make more money just because you own at least 100 shares of a stock. So in theory, the more shares that you have, the more money you can technically make. So without going too much into detail about what a covered call is, because there very well might be people that are watching this video right now that have zero options experience, and that's okay. You can still do what I'm about to show you without knowing anything about options. When it comes to options, there are calls and there are puts. If you buy a call, you expect the stock to go up. If you buy a put, you expect the stock to go down. So what happens when you sell a call? Because when you buy a call, you want the stock to go up. But when you sell a call, it's not that you don't want the stock to go up. It's that you don't want the stock to go up to a certain price by a certain date. So if you sell a call option, you basically just don't want the stock price to go above the strike price by the expiration date. Now, if you have literally no idea what the heck I just said, what a strike price is, what an expiration date is, you want to know more about calls and options, I will be starting a series on options because I love options. I know a lot about them. I would like to think I'm very knowledgeable. So in the future, in the next coming days, weeks, I will be starting a I don't really know yet, weekly series, or just I'll be dropping videos here and there explaining options, what are options, different ways to use them, and just, because that's what I really enjoy. So in order for me to have fun on this channel and help you guys out, we are definitely going to be having an options series. So if that interests you, feel free to subscribe and stick around for that. Okay, where were we? Right. Selling an option call means that you don't want the stock price to go above a certain price by a certain time. It's not that you don't want the stock to go up at all or that you don't believe in the stock. It's basically just a short-term bet that you don't think the price will go above a certain price in X amount of days. Buying options and buying shares are very similar in terms of how they're done. When you buy shares of a stock, you have to physically buy those shares from somebody else because they're selling them at X price and you're buying them at X price. It's the same thing with an option, right? In order for somebody to buy an option contract, somebody has to sell an option contract. So this is where you come in. There will always be people wanting to buy contracts. So where you come in is you're going to be like, okay, well, I'm going to sell you some contracts. And the reason why having 100 shares of the stock that you want to sell covered calls in is important is because the way that options work, again, for those of you that don't really know, options, you buy and sell contracts. One contract is the equivalent of 100 shares. That's why that's important, and I will touch on that as we go into a live example in just a little bit. And before we go any further and I get angry comments in the comment section, selling covered calls against a stock does not hurt the stock. You are not shorting the stock. It does not mean that you want the stock price to go down. Nothing happens to the stock price when you buy or sell an option. Nothing happens to the stock price at all when you buy an option. Options and shares, completely different. There is no tie between them. Good? Understanding? Awesome. So how does selling a covered call actually make you money? So in the options market and world, there's a thing called time decay. So basically every day that the stock does not get to your option strike price that you have, it loses a little bit of value. Also known as time decay. You can go into like the Greeks with the delta and the thetas. And again, if you don't know anything, I'm going to teach you soon. So that's how when you sell a covered call, you're able to make money. When you sell a covered call, basically what's happening is the person that's buying the contract from you is literally just giving you the money of whatever it costs there, and that's called a credit. So whenever you sell an option, you'll see in your buying power, you will have a little bit more, whatever it was that you sold. Because that's what happens when they buy something, they're literally just giving you the money. And so what's going to happen next is throughout time, however much time you have allotted for your contract, the stock price will either go up or down. And your option price will then move accordingly to the stock price because that's how options work. They are tied to the stock price. So for every day that the stock price does not get to your strike price, a little bit of money will come off of your option contract, which is a good thing because you already got paid up front. So let's say that somebody pays you $100 for one option contract, right? You now have $100 extra. A couple days go by, the stock price is not really going anywhere. It's not going up. Now that option contract is now worth around $50. In theory, that sounds like a bad thing, but in all reality, that's a good thing because now you are up $50. The person that bought it from you is down $50. That's where that money distribution goes. So you can either do one of two things when you sell covered calls. So you can either wait until expiration date and get all of that options premium, also known as the money. So you could wait until the expiration date and collect all $100. Or if you are already up a little bit, or even if you're down and the stock price is moving a little bit, you don't like it, you don't like the bet that you made hypothetically, you can buy your contract that you sold to exit your position for either a loss or a gain or a break even, I guess. So you're not stuck until expiration. You can get out if you need to. So how does selling a covered call option make you weekly money? Well, options expire every Friday. So meaning you can sell these things basically every week, which means that you have the opportunity to make a weekly passive income. How much passive income is going to completely depend on how many shares you own. Okay, now let's look at a live example so that you can actually see, because I'm a visual learner. I'm sure I got plenty of visual learners out there. So let's just go actually see what the heck I'm talking about. On the screen right now, we are looking at Sundial Growers, ticker symbol SNDL. What we're going to want to do, obviously I'm on Robinhood, and you can do this on any platform. We're going to click on Sundial options, and as you can see, it's going to bring up the closest expiration date, which would be today, March 19th. But we're not interested in this week because this week is over. So what we're going to want to do is we're going to take a peek at March 26th, which is next Friday. So again, options chains, this is an options chain. It's just what we call it. And they're going to be different for every stock. So this expiration date actually does not look too great. And here's why. Because what I would want to do, so right now the stock price is at $1.48. Betting that the stock will not be above $1.50 by next Friday does not seem like the smartest thing to do. And if I was to try and sell the $2 call, I would literally only be getting $1. So let's take a peek at the next expiration date, which would be April 1st, which is 2 weeks out. And this looks a lot better. So here's what you need to be looking for. So first of all, you need to look at the expiration date. You need to be like, okay, am I comfortable saying that I don't think the stock price will be above X amount of dollars by this time? And then you go here and you look and you find the price. You're like, which price am I comfortable with? Honestly, right now, you can either sell the $2 or the $2.50 call option for $8. Now, to some of you, that might not seem like a lot. And to some of you, it seems like, yeah, I could use an extra $8. But here's the thing. The reason, like I said earlier, with the more shares that you have, the more money you can potentially make. So for every 100 shares you own, you can sell one contract. So if you own 1,000 shares of Sundial or any stock, you can sell 10 contracts. And this one is especially inviting because you can see that the $2.50 and $2 ones are the same price. So I don't believe that, granted, I don't own any Sundial stock, but if I did, selling the $2 call is a little bit risky considering that the stock price is only basically 52 cents below it. Whereas selling the $2.50 call, you would be bringing in the same amount and the stock price is a full dollar below that. And because this is technically a penny stock, the stock moving $1 in 2 weeks without any like crazy news is a little bit unlikely. So I'm just going to show you an example. Again, I don't own any shares, but I'm going to click this one. You can see up here, I have the sell and then I'm on the call options chain. So I'm going to click that. It says that the max profit is $5, even though we should be technically be getting $8. And that's because when, much like a stock price, shares also have a bid and ask price. And so it just automatically put in 5 cents. I'm going to go ahead and put in 8 cents, but that doesn't mean it's going to get filled. Somebody has to buy it from you at 8 cents. Again, if you don't know anything about options, I would implore you to subscribe because I'm going to be making an option series, but just do more research before you actually do this. Okay, so let's say that I have 1,000 shares and I can sell up to 10 contracts, which means that I could put 10 contracts, which would net me $80 as long as the stock price is not above $2.50 come April 1st. Okay, but here's like the disclosure of the whole thing. What happens if Sundial stock price is above $2.50 at expiration at April 1st? It's above $2.50. So the whole way that you're even allowed to sell these contracts is you are putting up your shares as collateral. You're allowed to do this because Robinhood knows that if the stock price goes above $2.50 or whatever your strike price is at expiration date, they will then take 100 shares per contract that you sold. So this isn't free money. This isn't guaranteed money. There is definitely risk involved. It should be a calculated risk. It should not just be, oh, I'm going to sell this contract because it's going to make me the most money. No, you have to be smart. So my advice would be, granted, I'm not a financial advisor, as the sign says, but my personal advice, the first time you do this, if you've never done this before, only sell like 1 or 2. It doesn't matter how many you can sell in total, but just dip your toes in. Figure out what the heck is going on. Because, life isn't fair. The stock market isn't fair. Weird things happen all the time. And for what, like news could come out like next week that Sundial is merging with somebody. It shoots the stock up to like $4. And then what? And then you just lost all of your shares if you sold as many contracts as you could. So just play it safe at first. There's no rush. So this was a very basic and very quick nitty-gritty video on how to do it. Obviously, I didn't go too in-depth because for those of you that are watching that already know how to do this, that would just be boring. If you want to see more options video, if you want to see a more in-depth version of what the heck I just said, I will gladly make another in-depth tutorial on selling covered calls. So please just let me know down in the comments below. And even if you go to the comments and you see that people have already written that they want to see that video, still write a comment, because the more comments I see, the more I'm going to be like, oh wow, there's a lot of people that want to see this. I really hope that you guys enjoyed this video and got something out of it. Let me know your thoughts down in the comments below, and if you are thinking about doing this option strategy. And as always, I will see you guys next video.